Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thanks so much for coming on today.
Good afternoon, Devin.
Well, stocks in New York closed lower overnight. All three main indices down, led by tech and consumer shares. AMD was down more than 6%, Nvidia down more than 5%. The momentum from last week is gone, it seems. What's the story in the global markets?
U.S. Stocks slumped Tuesday, giving up early gains and falling for a second consecutive day as investors examine fresh economic figures for clues about the pace of monetary policy tightening. Particularly, as you said, Devin, high-tech stocks were more affected by these new changes. The Dow Jones Industrial Average dropped 1.6%. The S&P 500 closed down 2%. The tech-focused Nasdaq Composite Index fell 3%. In recent sessions, the major indexes have been highly sensitive to news and data as investors assess the durability of markets bounce from the lows. The S&P 500 earlier this month fell into a bear market, or a 20% drop from a recent peak, amid the Federal Reserve rate increase campaign to tamp down historically high inflation. In Asia, indexes broadly declined, even with the news from China that loosens previous strict quarantines. The Shanghai Index and Hong Kong's Hang Seng Index closed 1.4% and 2.1% lower, respectively. Tokyo's Nikkei also retreated 0.9% as of 4 p.m. in Seoul time.
Well, a similar story here in Korea, too. Stocks down, virtually all the big names, with continued net selling by foreign investors. Carmakers in particular down a lot, perhaps on news of a decline in U.S. consumer confidence contributing to that. Tell us about the domestic market.
Domestic markets also have retreated today after 3 straight days rise until yesterday. The benchmark Kospi dropped 1.8%, and Kosdaq also dropped 0.9% today. Many different kinds of concerns are dominating domestic markets about the possibility of the declining economy. Particularly, investors became negative on robust economic recovery for this year. Both the Korean government and Bank of Korea expect this year's economic growth would be 2% level, which is adjusted to downside from previous 3% level. In Kospi market, foreign and domestic institutional investors net sold 921 billion won, which is larger than the average sales by the two investor groups. Most of the large cap stocks dropped today as the whole market shrinks. Samsung Electronics dropped 2.4%, and the second largest cap, LG Energy Solution, also dropped 4.6%.
Well, looking at the broader economy here, Professor, data show businesses in Korea are pessimistic going into July. Sentiment for next month is at the lowest in a year and a half. Biggest decline was in utilities. What's the sentiment like for business right now?
According to Korean Chamber of Commerce survey, Korean business sentiment worsens for the third quarter this year amid high inflation and depreciating Korean won. The Business Sentiment Index, or BSI, for the local companies came to 79 for the third quarter, down 17 points from the previous quarter. The index measures corporate prospects for business conditions in the following quarter. A reading below 100 means pessimist outnumber optimist. Worsened sentiment is focused on petrochemical, auto parts, and non-matter material industries. On regional basis, the sentiment is worsened in Jeonnam, Daejeon, Incheon, Ulsan, and Gyeonggi regions. It looks that until inflation and exchange rates are both stabilized, domestic business sentiment would be destabilized more.
We hope those do stabilize soon. Finally, Professor, the Bank of Korea reports consumer expectations for inflation at the highest in 10 years. Expectation now for about 4% over the next year, and expectations like this can lead prices higher on their own. So consumer sentiment about the economy down right now. What's in this report from the Bank of Korea?
According to Bank of Korea's recent report, inflation expectations in Korea hit the highest level in about 10 years in June, amid worries that prices are fast increasing due to high energy and commodity costs. The report finds that ordinary people expect consumer prices to rise 3.9% over the next year. This figure was also much higher than that of the previous month, 3.3%. Data on expected inflation is closely monitored as a rise could prompt people to demand more wage hikes for fear of the fall in their purchasing power from their salaries, which will eventually apply additional upward pressure on already high inflation. The composite consumer sentiment index stood at 96.4 in June, down 6.2 points from previous month. This marked the first time in 16 months that the index has fallen below 100.
Right. Well, Professor, we're going to have to leave it there for today. Thank you so much for sharing your insights with us. We always appreciate it.
Thank you very much, Devin.